Today is Wednesday, the 4th of May. And first, before we look at the charts, I wanted to point out a cool change to this daily spreadsheet. That is, we now have the arrows in here which point the direction of the 5, 20, and 50-day moving average. Generally speaking, when the 5-day moving average is rising, we don't want to sell short, in terms of entries, and we don't want to fight the bigger picture moving averages with the 20 and 50-day moving average still declining. So we remain in a mixed message, but a very impressive performance today. So let's close that out and take a look. Here's the, let's start with the S&P as we always do. We're right up to last year's volume weighted average price. That's the blue volume weighted average price. And overhead, we have the declining 20-day moving average and the declining 50-day moving average. We also have the volume weighted average price off of this peak, which I think, have anchored to all of these charts because I think it's likely to be significant. And you can see that's where we see the 50-day moving average as well and the year-to-date volume weighted average price just overhead. This market could continue to power higher up towards that level and perhaps even higher. Maybe this was the low. We simply don't know. What we need is more evidence that a sustainable low has been made, and that's going to take time, and individual stocks will lead the way. Here's the 15-minute time frame. You can see clearly where we're back above that rising 5-day moving average. After the Fed meeting, we saw a dip right down to the week-to-date volume weighted average price, and it just rocket ship higher from there. So we can take a look at that on the 5-minute time frame. There's that pullback, and if we put the week-to-date, month-to-date volume weighted average price on there, you can see we came right down to it. That had been resistance on Monday, support today, and rocketing higher. So we'll start to keep track of the volume weighted average price from the Fed meeting. It actually should go right there. Tomorrow, if we see pullbacks down towards that level, it's likely that that will become defended and that perhaps we could continue to move higher, or we'll fight that level and then perhaps continue down towards what is the 2-day VWAP. My suspicion is that we would find buyers at that level. We got a little bit overbought here today simply because we've got a lot of shorts trying to cover and a lot of sideline cash looking at this market saying, hey, I need to get back in. That was the low. Of course, we don't know if it's the low. We saw a breakout here at the end of the day. You know what I think about those breakouts? That let other people chase them. The smart money, the smarter action is to wait for a pullback down towards that volume weighted average price, maybe even down towards this red volume weighted average price. But I think maybe we get a gap up and continuation higher tomorrow, and then we start to see that volume weighted average price hold as a place where buyers are found. That's what seems most likely. It is again within the context of an overall decline. If you recall this chart that I've been posting, we've had a rally of 9%, 7%, and 11% this year already prior to today. So, maybe we're going to see another big rally in this market. And that was the older chart, actually. That wasn't the updated one, but it doesn't matter. The point is, we see strong rallies in a downtrend, but the primary trend is still lower. We're below a declining 20, 30, 40-week moving average, so we have to maintain a high level of caution and suspicion about these rallies. Meanwhile, if you latch on to them during the day, if you were paying attention and you got involved, that's great. Strong, powerful rally, but they certainly don't make it easy. The 5-day moving average is rising in the NASDAQ as well. We saw here that, this break, again, perhaps it continues higher, but it just came from 315 to 330, a 15-point move. That's 5%. So, do you want to be a buyer after a 5% move? Maybe we get continuation up a little bit tomorrow, and then it begins to pull back. And again, we'll keep an eye on the volume weighted average price from the Fed, and we're going to keep an eye on the volume weighted average price from this peak overhead. That's where we had seen sellers previously. So a potential scenario is maybe it runs up into this level tomorrow morning, begins to pull back, and then does something like this and catches a bid maybe at the VWAP from the Fed right in this area. That's this level. So keep an eye on that. That's a potential scenario. We continue to have mixed messages. We have a declining 20-day moving average. We have a declining 50-day moving average. The VWAP off of this peak is still declining. So, it's nice to see this, this rally, and it's better if you participate in it. But if you're on the sidelines, thinking, oh shoot, I wish I, had seen the foresight to buy the low. Well, again, they don't make it easy. The Russell 2000 also bouncing from this level in here. We discussed last night that this is, possibly a failed breakdown, and I've discussed it on Twitter and in several of these videos recently. But there's no evidence that it's a longer term bottom. We need time for that to be evidence. Meanwhile, with a declining 20 and 50-day moving average, it tells us that we still have reason for caution here, and that we don't trust rallies. It doesn't mean we can't participate in them on a shorter term time frame, but to trust it and get back involved in the market with large commitments to the long side, unless you're super nimble, it doesn't really make sense. Maybe we see continuation here in the same story. The VWAP from the Fed is going to be the first level I'll be looking at in terms of potential for demand if we pull back tomorrow. Semiconductors, same story. Here's the volume weighted average price from the from today's Fed meeting. That will be important on the daily time frame. We're up close to the volume weighted average price from that peak. It's not something that has to hold it back. It's a potential level of resistance. We're above the declining 20-day moving average. We've got the declining 50-day moving average overhead. It's still, again, the market is oversold. We did talk about this being, when the market was up over here, we said look for it to continue to go test those lows. That's what markets and downtrends do. And this was looking like maybe a failed breakdown. I think that the biotechs can likely continue up towards this level 125-ish. Then this is what we spoke about last night as a possible scenario. Of course, it didn't work out like that. It never does. Those are just potential scenarios. Maybe again we see it pull back to where? Well, let's look at the 5-minute time frame and say from the Federal Reserve meeting right here, we saw the initial volatility that acted as resistance at that VWAP, and now tomorrow, if we rally up, or even if we just continue, if we see some pullback in the morning, it might end up looking like this. And if it were then to, be above, this would be tomorrow's volume weighted average price. If it came down and did something like this, got back above tomorrow's VWAP right here, I think you could buy it with a stop under there. Same principles we talk about in every single day in our trade ideas video, but this being with the indexes. The financials, same story. Overall downtrend, getting a nice bounce. Perhaps we continue up to that 20 and 50-day moving average. Energy names out to new highs. I had posted a chart of oil on Twitter earlier today. So this is where the strength is.